Hi friends, myself Ankur Sodani, and on behalf of personal tutor I am going to teach you fundamentals of partnership. No doubt it is one of the interesting topic of 12th standard and it is one of the highest scoring topic of 12th standard. It is around contains 35 marks of out of your 80 marks question paper. So we begin with the definition part of partnership. Our topic, partnership. First we will go through the definition part of the partnership. What is the meaning of partnership? So in India, partnership is governed through Indian Partnership Act 1932. It is the core element which governs us what is partnership. So first, Section 4 of Indian Partnership Act 1932 governs what is partnership. According to Section 4, partnership is a relationship between persons who agree to share profits of the business carried on by all or any one of them acting for all. Once again, I am writing the meaning. Partnership is a relation between persons who agreed to share profits of the business carried on by all or any one of them acting for all. Now we go through the definition. First term, that is persons. What is the meaning of person under the Partnership Act 1932? So let's go through the keywords. Person. Person means minimum number of partners and the maximum number of partners governed under the Act. As you have studied in 11th standard regarding the form of business, under that you have studied partnership little bit, but we will discuss again persons. So there must be minimum 2 partners and maximum 100 partners. But regarding maximum number, central government has specified the guidelines that in any form of business, maximum number of partners cannot be more than 50 partners. So minimum number of partners will be 2 and maximum number of partners in a partnership maximum of 50 members. As we have discussed the term partners. Now the second term, agreed. Agreed is somehow related with the agreement. Partnership type of business is not compulsory to have registered partnership or unregistered partnership. It means that partnership agreement may be oral as well as written agreement. But when we are talking about agreement, then in oral agreement there is a no surety that in case of dispute, how the dispute will be resolved, whether the partners will get gain or a partner will lose. So it will be fruitful to have a partnership agreement in a written form. And once the partnership agreement is written, that is called as partnership deed. So written agreements of a partners is called as partnership deed. So the agreement may be oral or written, and once it is written, then it is called as partnership deed. Now the third and the most important term, that is profits. Let us discuss the third term, profit. So as we are running the business with a motive of earning profit, but it doesn't mean that every time we will earn the profit. So here word profit includes losses also, means partners will share the profit as well as the losses of the business. Now the fourth term, that is business. What is the meaning of business? As two persons join together and buy a particular land, and after 2 years they will get a handsome amount, so they are going to sell that land. Whether this type of transaction is considered as a business or not. So it is not considered as a business, because business means regularity, means the transaction should be conducted regularly. As in the current attempt that CBSE has put a question on this theory, that two persons purchase a plot, and when they are getting a good amount, they will sell that plot. So whether it is considered as a profit of the partnership. So the answer will be no. Now the next term, carried on by all or any one of them acting for all. It means that the relationship of partnership and partners are as a principal as well as a agent. Means partners are working as a principal of the business as well as the agent of the business. So the whole definition we have covered through with the term persons. So minimum there are 2 persons and maximum 50 persons. Next term, agreed. Agreed means agreement between the partners. It may be oral agreement, it may be written, but when agreement is written, that is called as partnership deed. Third term, that is profit. Profit includes the word losses too. And next term, business. Business means the transaction should be done on a continuous basis. Fourth, after that, agreed by all or carried on by all or act. It means that the relationship between partners and the firm is either as a principal as well as a agent. Okay, the next topic that we have discussed is partnership deed. As we know that partnership deed is a written agreement between the partners, and how it helps. So in case of any dispute, it will considered as a document of evidence for our partnership. So let's move partnership deed. So what topics or what are the contents of the partnership? So first, as I am going through the flashback that you have studied, memorandum and article of association. These documents are somehow related with the company. In the same sense, partnership deed is related with the partnership. In partnership, as of memorandum of association, where it is capital clause, place clause and director clause are mentioned, apart from that object clause, same types of clauses are given in the partnership deed. So first we go through what is partnership deed and its content. So first content, that is name and address of firm. Second, name and address of partners. Third, capital contribution. Fourth point, regarding interest on capital, interest on drawing, salary and commission. And fifth point, revaluation or assessment of assets and liability of the business. So these are the core points which are contained in the partnership deed. First is name and address of the firm. Second, name and address of the partners, capital contribution, interest on capital, interest on drawing, salary, commission, and revaluation or reassessment of assets and liability of the firm in case of reconstitution of partnership. These are the crucial points. Apart from that, there are 8 to 10 further points, but major parts that are these points. Now we are moving to the third topic, that is, what if there is a no partnership deed? As we have discussed that it is not compulsory to be registered partnership firm. It means that partnership firm may be written or may be oral. So in case of written agreement, that agreement we have discussed, that is partnership deed. But what happen when there is no written agreement between the partners? In that case, the law will prevail, that is Indian Partnership Act 1932 will guide us what will be the consequences, what will be the merits, what will be the demerits when there is a no partnership deed or when partnership deed is silent. So let us look that. First, as I have break this 6 points, majorly it contains 6 points, so I consider 3 points as a favorable points and 3 points as a unfavorable points from the point of view of partners. Let's look the first 3 points, that is unfavorable points. That if partnership deed is absent or partnership deed is silent, in that case profit sharing ratio will be equal. Means that no partner will get more profit, no partner will get less profit. Means that each and every partner will get equal amount of profit of the firm. And profit means it also includes losses. Means in case of loss, all will bear the losses equally, unless otherwise there is a case of guarantee that we will discuss later on. Profit sharing ratio will be equal. Second point, no interest on capital. Means the amount of capital invested by the partner in a firm, against that he will not get any interest. It means that he will not be benefited by the firm if there is no partnership deed. Third point, that is no salary to the partner or no commission to the partner. It means that if a partner says that I have devoted more time in a firm and I boost the sale of the firm, so I will get extra benefit from the firm, but other partner can deny, because in case of deed he will get, but in case if deed is silent or deed is not there, he will not get any extra incentive from the firm. So these 3 points we have discussed that these are considered as an unfavorable points. That is, profit sharing ratio will be equal, no interest on capital, and third, no salary and commission to the partner. Now we are moving to the next 3 points, that is the favorable points for the partner. So first, as the partner has introduced capital to the firm, he will not get any interest. So same, when he withdraw any amount out of profit, the firm will not charge any extra amount to the partner, and that is called as interest on drawings. So no interest on drawing will be charged against partner when he withdrew any part of profit out of the firm's amount. Second, in case of loan, if a partner has granted loan, so he will get interest at the rate of 6% per annum. How much interest? 6% per annum. As no interest on capital is there, no interest on drawing is there. But if in case of loan, he will get interest at the rate of 6% per annum. And the third point, that is also considered as a favorable point for the old partners. If they want to add or if they want to give admission to any new partner, the consent of all the partners are required. So consent of all partners when in case of admission of new partner. So have a look at this 3 points. When the partnership deed is silent, then provision of Indian Partnership Act 1932 will govern. Maximum books contain this first, second, fourth, fifth and sixth point. But it is also one of the crucial point that in the absence of deed, no partner will be admitted unless the consent has been given by all partners of the firm. Okay, now we are moving towards our fourth topic, that is profit and before moving to the profit and loss appropriation, have a look at the journal entries at the time of partnership firm. So as you know, the journal entry for the capital contribution by a sole proprietor, as he is a single person, so the normal journal entry will be cash account debit to capital account. But here in a partnership business, we have discussed there are persons and minimum there are 2 persons. So how we can segregate how much capital has been contributed by A person and how much capital contributed by B person. So instead of writing capital account, we will write the name of the partner. Suppose the name of the partner will be AM. So AM capital account, and suppose second partner whose name is O, so O capital account. This entry will be passed when the partner introduce capital in a firm. So that is cash account debit to M's capital account to O's capital account. Now the most important entries comes through. Before going to the most important entries, we will look at the profit and loss appropriation account. What is profit and loss appropriation account? So profit and loss appropriation account is prepared only. P&L appropriation account is prepared only in case of partnership business. It means that P&L appropriation account is prepared only and only in case of partnership business. As in the 11th standard, you have discussed the financial statement. You have gone through the financial statement, that is trading account, profit and loss account, and then after you have directly jumped to the balance sheet. But in our partnership, one separate account that is also prepared. This account is called as P&L appropriation account. The nature of P&L appropriation account is same as of profit and loss account, but it is an extension of the profit and loss account. The main word appropriation, which means that distribution. It means that distribution, as P&L account contains all those items which are either the income of the business or as a charge. It means that expenses of the business. Is it okay? So P&L appropriation account is nothing but distribution, and it is an extension of partnership. It is an extension of profit and loss account. ठीक है, चलें. So